Tesla is absolutely shooting to the moon. This thing is up to $650 a share in after-hours trading, up nearly 12%. What is going on here? First, I wanted to show you a picture of some Tesla shareholders. They're just waiting. If you didn't know, this is the line for the dispensary that just opened up in Chicago. That's right. All these Tesla people, these Tesla shareholders, I think they might be high because what is going on right here? Up 11.62%. What is going on right now? Sorry, that was a little bit brash, and I do apologize. I'll take it back. But they just reported earnings, and that's why it's up so high. So let's take a look at those earnings and see what's going on, and why this thing shot up freaking to 650. Wow. Just saying. This might be them. So look at this. Tesla on a non-GAAP EPS standpoint, of course, makes sense. Obviously, the unaudited version. Just saying. Beat by 38 cents, $2.14 per share. It's fantastic. I mean, this is a company that didn't make profit last year, and here they are posting a very profitable quarter. And I think that's what a lot of the hubbub is about. Pretty much, as I said before, it's entirely going to be based off that profit line. If they post a profitable quarter, if they meet expectations in terms of profit, I knew the stock was going to continue going up. I didn't think it would go up this high, though. It's getting to absurd status. There's no doubt about it. But obviously, on a GAAP EPS standpoint, they missed by 26 cents. So that's accounting for a bunch of stuff. Could be stuff like Elon Musk's stock compensation, stuff like that in terms of that. So that's why the generally accepted accounting practice EPS is a little bit lower always because it's an audited version of it. So they take out some things that they don't take out on the non-GAAP perspective. So if we're looking at revenue, they beat by $300 million, but I have to say this. 2% rise year over year. I'm just going to say something here. Now, hear me out. 2% rise year over year? That's it? I understand they beat in terms of what their goal was, but that's a very small percentage growth for a company that right now is trading at obviously a PE that's not really perceivable because they didn't make profit last year, but a forward PE somewhere around 90 to 100 for this company. Actually, after this rise, it's probably going to be somewhere closer to the 120 to 130 range after such a high rise in stock price. So this thing's trading at such an extremely expensive valuation, but they're only rising sales 2% year over year, which is crazy. That's obviously not what you want to see for them. Still, it's good growth at $7 billion. That's very good sales for them. That's a good sales number. But my only concern being that's it in terms of growth. It scares me in terms of share valuation. That's all that's really there. I don't mean to be rude. I'm being pessimistic, and I don't want to be. But the share valuation just doesn't make sense. I think it's trading at the valuation of a super, super high growth stock of something that would grow 30% year over year sales, but it's not actually performing that way. It's trading at that valuation, but it's not performing that way, which kind of scares me for a couple reasons. So I don't like the valuation because I don't think it's unfair to say it's in a bubble status, and if that bubble were to pop, if there were to be some bad news, something specific, I think the stock could get hammered pretty bad. I don't think necessarily that it's going to, but I believe that if something were to happen negative, this thing could absolutely drop a very large way down, which sucks, obviously. Well, that's not what we're looking for. It's just one of those stocks right now that doesn't care about anything. It doesn't care about facts. It doesn't care about anything. People are going to be buying this stock because of the name. That's really where this is at right now, which concerns me whenever a stock gets to that point. It doesn't matter what they post, what they do. people are going to be buying the heck out of this because people are really buying into the company, which I get. Obviously, a company is very ahead of anyone in terms of anything that they do. They really are. Elon Musk is a revolutionary guy, and I think that's why a lot of people are getting on board with this. My only concern there is just that valuation, which I think is just absurd right now. It's something that they're not going to really. It's not going to be fair valuation at this price even for another several years. That's my only concern. I'm a very valuation focused guy, and you'll notice that too. I don't necessarily buy into the hype quite a lot because I do really focus on the numbers. That's my thing. It's the numbers. Let's move on to some of this other important data. So it delivered 19,475 Model S/X vehicles in quarter 4 and 92,620 Model 3s. So definitely good for the Model 3s. Gross margin for the quarter was down 1% year over year to 18.5 now, or 18.8 I should say. But is an increase over, or pretty much the same as last quarter, and a little bit over the consensus in terms of margin. So good for them. Automotive gross margin slotted in at $22.5 billion versus $22.8 in Q3, so a little bit less. Adjusted EBITDA, okay, good for them, was $1.18 billion. That's a good profit for them. That's pretty exciting. I'm pretty excited about that. If you're a Tesla shareholder, you should be excited about that. And that's really where this, I think this hullabaloo, what's the word? All this craziness over the stock is all because of, I think, that profit line. I mean, that's really all I could imagine. And a lot of it's really driven off future too, because they gave some interesting forecasts here. So for the Model Y update here, the production ramp of Model Y started in January 2020. Together with Model 3, our combined installed production capacity for those vehicles is now 400,000 units per year. The ramp of Model Y will be gradual as we'll be adding additional machinery in various production shops. After Model Y capacity should reach, or after such expansions are done by mid-2020, think about that, installed combined with Model 3 and Model Y, capacity should reach 500,000 units per year. We will start to deliver Model Y vehicles by the end of quarter 1 2020. Cool for them. Obviously a big vehicle for them. The Model Y could be very big for them. We'll see how that works for them, but Tesla says it is gradually ramping up local production of battery packs in Shanghai, and the rest of the Model 3 processes are running as expected. The news from Europe is that the first deliveries from the Berlin Gigafactory are anticipated in 2021, so obviously that one's not going to be up and running until next year, but pretty cool. Expects to deliver more than 500,000 vehicles this year and see positive free cash flow, so they expect a positive year in terms of profit, which would be fantastic for them if they did. This is the year Elon said they were going to, so it'll be cool to see if they do that, because it'll help make sure the stock doesn't plummet like I fear it could. If they continue this positivity, there's a good chance it just stays. Let's look at the slides for them, see what's going on here. Highlights. We're not looking at the highlights just yet because we look at them as we go. So here's obviously your unaudited financial summary. So year-over-year growth in automotive revenues of 1%. Yikes. Total revenues grew 2%. Hoo-wee. Gross profit down 7% year-over-year. And same thing with on total revenues, gross profit was down 4% year over year as well. Operating expenses was down though, which is pretty significant. Down, even year over year, but income from operations was down. Oof, yikes. Operating margin was down. Yikes. That's okay. We're looking at these numbers. Adjusted EBITDA was up 11 or 13%. So good for them. That's what we like to see. Net income loss down 25%, which is good. Net income loss is good. You don't want to see a decrease in loss. That's what we're talking about. That's okay. That's okay. We'll take it. We're going to take this. I think it's okay. Free cash flow up 11% year over year. Net cash provided in operations up 15%. Capital expenditures, though, up 27%. And cash equivalents, that's right, of $6 billion, up 70% year over year. So very good growth in that. This is the most faint thing I've ever seen in my life. Our revenue is positively impacted by a strong increase in vehicle deliveries. So good for them. Let's look at some of these good old charts. That's what we like to look at. We don't like to read all these words. We like looking at these charts. So look at these Model S production. Obviously production is important, but the delivery is more important too, because that's them selling it and actually getting out. They don't really get credit for the sale technically until it's delivered. So Model S and X production, you see year over year, they actually produced less Model S and Model X because they're really shifting to the Model 3 as their main model right now. Model 3 is their vehicle. So that rose 42% year over year in terms of production. In terms of deliveries, you saw a 29% decrease in Model S and X deliveries. Makes sense, but a 46% increase in Model 3 deliveries. So that makes plenty of sense. Model 3 is their hot vehicle right now, so nothing insane. In terms of solar deployed, actually a decrease in terms of solar, but in terms of storage, they increased 136% year over year, so good for them. Store and service locations rose 13% year over year, and their mobile service fleet rose 81% year over year, which is good. That mobile service fleet, people that take care of Tesla vehicles that drive on the road, you know what I mean? They'll be able to support you in case you need battery replacement, whatever it might be, service on the vehicle, which is nice. Supercharging stations rose 28% year over year, and supercharger connectors rose 34% year over year. Good numbers for them. Good numbers. So let's take a look. Fremont, Shanghai, you see this. Obviously the Berlin is in development. Shanghai, they're in construction on Model Ys, so they're working on those. They are currently producing Model 3s in Shanghai as well as in Fremont. Obviously here in the U.S., they plan on getting the Model Y rocking out here first. Then we'll see it in Shanghai, Berlin, and then in North America you see the Semi, which will be coming out in development, the Roadster and Cybertruck all coming up. Can't wait for them. You know I like me that Cybertruck. What can I say? As much as I tend to hate on Tesla sometimes, I like that Cybertruck. You know I do. Tesla vehicles have driven over 3 billion miles in autopilot mode. Our fleet grows, that's right, as part of their fleet there, growing that network of autonomous driving so people don't crash and the vehicles are taking control of the roads for you. Autopilot miles increased exponentially, adding yet more data to our neural net of Tesla vehicles. With our FSD computer have been fully updated with new software that can better detect new details in their environment, allowing us to show various lane markings, traffic lights, stop signs, cones, as well as other vehicles and road users. Good stuff. Understanding the environment around a Tesla is key to enabling our cars to react to traffic lights and stop signs and take intersections through city streets. We are currently validating this functionality before releasing to customers, and we look forward to gradual deployment. Very cool. They're working on their autonomous driving network, which again they have the top one out of anyone right now. They have the top in terms of their neural net capacity for driving, autonomous driving. So they just have the most data out of anyone right now. There's no doubt about it. Due to continued engineering progress on the Model Y, all-wheel drive, we have been able to increase the maximum EPA range to 315 miles on the Model Y. So very cool compared to our previous 280. So very cool for them. Good increase in that. Other highlights being energy. So energy storage deployments reached an all-time high for energy storage. Cool for them. 2019 we deployed 165 gigawatts of energy storage, more than we deployed in all prior years combined. Then we have obviously the solar glass roof, which is pretty interesting too. We continue to ramp both solar glass roof production as well as installation. So solar glass roof is pretty nice. It's not going to be ugly. I don't want to say that a solar panel is ugly, but it's not a good look to a house, in my opinion. It's not a beautiful looking thing. So pretty exciting there. Good for them in terms of that. Vehicle delivery should comfortably exceed 500,000 units this year through the ramp of the Model Y in China and the Model Y in Fremont. Production will likely outpace deliveries this year. So, slight concern. I mean, I don't want to say that. But if you're producing more than you're delivering, again, it just kind of creates a mess. I don't want to look at it negatively, but you don't want to produce that much more than you are delivering, because that becomes liability at the end of the day. If it's a vehicle not sold, you're losing value on that thing. We expect positive quarterly cash flow going forward. So every single quarter they want positive cash flow. So if they have a negative quarter, it's a nightmare. But I think they have what it takes to turn it around, and I don't think it'll be an issue. We continue to believe our business has grown to the point of being self-funded, which is a huge deal. Again, that's been a lot of the thing too. That's been holding some Tesla shareholders back, or non-shareholders, I should say. But now people kind of are buying in because of the fact that they've said they're going to be able to be self-funded, as opposed to just relying on Elon Musk deploying money every time and raising capital. We expect a positive GAAP net income going forward, possibly temporary exceptions. Don't like that. I don't like that one. But they expect profitability. I just don't like that they say with possible temporary exemptions. Well, I don't know about that one. Production ramp of Model Y in Fremont has begun ahead of schedule. Good for them. We are planning to produce limited volumes of Tesla Semi this year. So a couple Tesla Semis potentially. Pretty cool. Let's look at these photos. This is the Fremont factory where they're producing the Model Y right now. Cool. You can take a look at that. Their SUV model. Very cool. Which one was this? So it's the Fremont factory still. You have the Model Y. Look at this bad boy. It's a little bit, it is a bubble car. Don't worry. But you see the difference between prototype to actual vehicle. Looks a lot more sharp, in my opinion. Still bubbly, but that's okay. Fremont factory layout versus the Gigafactory layout in Shanghai. You see on the left here your Fremont, and then the Gigafactory in Shanghai. It's just pretty much a straight line, as opposed to this one being spread out. So that's pretty cool. So vehicle deliveries, you see a very good growth in vehicle deliveries. Love to see that. Operating cash flow, you see obviously there's some rough numbers, but a positive free cash flow is good. Net income, you hate to see that, but you see some positivity now, which is nice. Not wonderful, but it's something you like to see. You gotta see that improvement. But again, from a trailing 12-month standpoint, they are negative in terms of net income, though, which is a very key point. As I said, no price to earnings ratio, because they're not making profit technically on a trailing 12-month standpoint. But if from this quarter on they do progress that, 3 quarters down the line, they will be making profit for full year, which would be exciting. Vehicle deliveries, obviously, boom. Look at this vehicle delivery and free cash flow improvement. Makes sense. Some financial statements. We love looking at this. I'm going to look at these current assets to debt. So obviously, as of December of last year, they had current assets or cash and cash equivalents of $3.6 billion. But right now they have $6.2 billion. So that's very, very nice. That's a very nice growth in terms of cash. I like to see that. But I do want to say also their accounts payable hasn't really changed that much since this quarter last year. So technically, they are becoming more free cash positive. It's fantastic to see. You see total, if we're looking at debt and financial leases, obviously that number has risen pretty substantially. Total liabilities pretty high at 26 billion, but their cash flow also, in terms of total assets, increased as well. So definitely something to look at. Nothing too crazy. Nothing really I want to share there. Nothing exciting. There's their logo, but that's really their slides right there. I hope you enjoyed, but again, I don't know what these investors are smoking. I just feel like this valuation kind of scares me. I understand if you're invested in Tesla, and I understand why you would be. There's a lot of hype around this thing. My only concern is if they aren't telling the truth on something, I think investors are going to sell out rapidly. But if you're making money on Tesla, I am very happy for you. Anytime you can make money off investments, that's what I love. So if you don't agree with my decision, and I know a lot of people don't, and a lot of people have made a lot of money off Tesla so far. I also had have a share of Tesla, which I sold off before this, but I made money off Tesla too, and I wish I had held on, I guess, but and potentially gotten more. But I think I'm at a point where I don't need it in my portfolio just because of that risk. I'm a very low-risk portfolio. I'm a low-risk investor, so that's why I don't really have a lot of these high-risk stocks like Tesla would be. A little too much volatility for me. So I really hope you enjoyed this. If you disagree, I understand. We'll keep talking about earnings here. Obviously, love talking about earnings. So big earnings season. Hope you enjoyed.